Hello friends, today you will listen to a conversation between Henry, a bank teller, and Kate, a client who wants to open a saving account.
Understanding basic banking terminology is essential for managing your finances and navigating everyday transactions. This list of key banking vocabulary will help you communicate confidently in a bank setting, whether you're opening an account, applying for a loan, or learning about credit. Check the list below the video. Let's begin.
Good morning. How can I help you today?
Hi, I'd like to open a new account, please.
Of course. What type of account are you interested in? We offer checking and savings accounts.
I think I'd like to open a savings account.
Great choice. Do you have an ID with you?
Yes, I have my passport here.
Perfect. I'll just need to take a look at it. And do you have a proof of address? For example, a utility bill or a bank statement?
Yes, I have a recent electricity bill.
Thank you. Everything looks good. Now, I just need to ask you a few questions. Can you please confirm your full name and your date of birth?
Sure, my name is Kate Smith, and my date of birth is February 3rd, 1987.
Thank you, Kate. Now, how much would you like to deposit to open your account?
I'd like to start with $200.
Okay, I'll set that up for you. Would you like to receive a debit card with your new account?
Yes, that would be great.
Excellent. Your card will be sent to your address within 5 to 7 business days. Is there anything else I can assist you with today?
Actually, yes. I've been thinking about getting a loan in the future. Can you explain to me how credit works?
Absolutely. So, when you apply for a loan, the bank will look at something called your credit score. This score is a number that represents how reliable you are at paying back money. It's based on your history of borrowing and repaying money, such as credit cards, loans, or even utility bills.
Oh, I see. How do they calculate that?
Your credit score is calculated based on a few factors. The most important are: point 1, payment history, whether you've made payments on time in the past. Point 2, credit usage, how much of your available credit you are using. It's better to use less than 30% of your credit limit. Point 3, length of credit history, the longer you've had credit, the better. Point 4, types of credit, a mix of different types of credit, like a credit card, car loan, mortgage, can help. Point 5, new credit, if you apply for a lot of new credit in a short period, it can lower your score.
That makes sense. So if I want to improve my credit score, should I just make sure to pay everything on time?
Exactly. Paying your bills on time is one of the most important things you can do. You can also try to keep your credit card balances low and avoid opening too many new accounts too quickly. Over time, if you manage your credit well, your score should improve.
Thanks, that was really helpful.
You're welcome, Kate. If you ever have more questions about credit or anything else, feel free to come by. Now, I'll go ahead and finish setting up your account. Your debit card should be in the mail soon.
Great. Thanks for your help today.
No problem. Have a wonderful day and good luck with your financial goals.
That is the end of the dialogue. Now it's time to learn new vocabulary. The credit score is a numerical representation of your creditworthiness, used by banks to determine the risk of lending money.
Factors influencing the score include payment history, credit usage, length of credit history, types of credit, and new credit applications. Let's learn new vocabulary.
An account is a record or arrangement with a bank or financial institution to manage your money.
Deposit is money placed into a bank account.
Proof of address is a document such as a utility bill or bank statement that confirms where you live.
Debit card is a card issued by a bank that allows you to spend money directly from your bank account.
Payment history is a record of your payments, showing whether you paid bills on time.
Loan is money borrowed from a bank or other financial institution, which must be repaid with interest.
Interest is the extra money you pay when you borrow money from a bank, or earn when you save money.
Credit usage is the amount of money you borrow or use on your credit cards compared to your credit limit.
Credit history is a record of how you've managed borrowed money in the past. This includes your credit cards, loans, and payment history.
Credit limit is the maximum amount of money you can borrow or charge to your credit card.
Utility bill is a bill for services such as electricity, gas, water, or internet, used as proof of where you live.
Business days are the days of the week when banks and businesses are open, typically Monday to Friday, excluding holidays.
Financial institution is an organization that manages money, such as a bank or credit union.
Mortgage is a type of loan used to buy a home, typically paid back in monthly installments.
Dear friends, these vocabulary words are essential when discussing basic banking and financial topics. Understanding these terms will help students navigate conversations about saving, borrowing, and managing money in a real-world context. Be smart and stay tuned.